All right. Well, Michael, the demise of Lehman and the crash of 2008. In 2016, you also created a mini crash warning system. Tell us about that.
Well, what happened is when the Bank of Japan announced that they were instituting a negative interest rate policy, I knew it's really dangerous for the markets. So I went in, did another investigation, and did about a month's of research on the previous crashes to see if I could find something that would have been an anomaly, or something that would have caused that crash, or would have alerted me that that crash was happening, and I found that. And then I created an algorithm out of that, and that algorithm, I used it throughout 2016 when the negative interest rates were growing and were really expanding, and the crash was very accurate and predicted the Brexit crash. That was the one crash that it predicted. It was the most significant crash, but it's a crash detection warning system. And it can be used by investors to hedge their accounts. It can be used by futures traders to trade the market on the upswings and downswings. And I put it on the back burner last year because there was no volatility in the markets, but I'm going to dust it off pretty soon and put it back in action. By the end of the year, I'll put it back in action for people to be able to use it.
So you see reason to bring it out now. There's writing on the wall about what's going to happen next.
Well, the S&P, to give you an example, I think somebody had said the other day on Bloomberg, the S&P was down more than 1% 3 times during 2016, and for the month of February, it was up or down 1% 12 times. So the volatility has clearly picked up. And in fact, the markets were down they've been down in March and February. But yeah, definitely the volatility is going to start picking up. When that volatility picks up to a certain point, and I'm looking for currency volatility also. I'm looking for the currencies to get more volatile because they interact with each other, the markets and the currencies.
Are you seeing telltale signals right now about what's happening with the currencies that are giving you a
Well,
heads
I
up?
see the currencies I see that they're getting more volatile, absolutely. Okay. But when they really take off and get volatile, then I'll know that that's the time to deploy this. And there's a reason for that. I actually have a video about it. And it's because of the yen becomes everything trades against something in the world. Right. You're a trader.
Okay. Yes, I'm trading.
So currencies trade in pairs. So, when you know the market's going to crash and you're a foreign investor, there's investors in 200 countries in the world. Right. What currency do you want to, if you're going to short the dollar, because if the market's going to crash, the dollar's going down, what's the best currency you want to be long? And that's what all currency trading is. You're shorting it, you're going long one currency and short the other.
Well, it tends to be anybody's guess because whatever country you're coming from, you tend to want to stay with your sovereign.
No, actually it's not. It's the yen is what everybody does it with because the yen's the most conservative fiscal country in the world. So Japan is the most conservative fiscally in the world, and they are very, very conservative socially as well. So everybody moves to the yen when these crashes start really getting full-fledged.
And you're seeing movement
and
in
everything
the yen now?
goes down. The euro goes down. All the other currencies go down. The yen holds is what happens. So yeah, well, I'll be tracking that with that NIRP crash indicator. But I'm not using it right now. It's not enough currency volatility right now.